Hi there, my name is Jason Ayers, CEO of the Croft Financial Group and a member of the Investment Review Committee. On behalf of the committee, thank you for taking the time to watch our portfolio manager's brief for July 2020. Well, the end of June marked the close of Q2 2020, and despite a few significant pullbacks, both U.S. and Canadian stock markets finished the month and the quarter in positive territory, a long way from the post-crash lows near the end of Q1. As a reminder, the S&P/TSX Composite Index finished the first quarter down over 21%, up from the initial plunge of nearly 40%, but a long way from the earlier mid-quarter highs. The Canadian Equity Index managed to regain another 16% in Q2, but was still down 9% at the close of the second quarter. The S&P 500, the United States broad-based stock market index, ended the first quarter down 20%, but regained as much in the second quarter, ending Q2 and the first half of the year down just 4%. In contrast, the tech-heavy U.S. NASDAQ index, which was negative 14% at the close of Q1, added back just over 30%, ending the second quarter and the first half of the year positive 12%. The Volatility Index, or VIX, which is often referred to as the fear index, reached astronomical levels early in the market correction and now remains relatively high, suggesting continued uncertainty. However, although much of the economic news as of late has been bad, it seems the unprecedented levels of fiscal and monetary stimulus have so far been sufficient to keep investors confident to stay invested and money flowing into stocks. Many are drawing comparisons to the trend of the market recovery between March and June of 2009 after the 2008 crash, which, if markets were to follow a similar path, would suggest a continuation, perhaps with a break over the summer, of the current recovery into the end of 2020. But let's not lose sight of the fact that there are some fundamental differences between 2009 and 2020. More specifically, a global pandemic that has yet to run its course, as well as a contentious U.S. presidential election, which itself could be cause for additional uncertainty in coming months. However, once again, to counter those concerns, I'll reference the now unprecedented levels of fiscal and monetary stimulus, which will most certainly continue to act as a tailwind to both the economic and market recoveries over the near term. With the shares of many companies already trading at or above targets, investors will be focused on the second quarter earnings ahead, paying close attention to how pessimistic or optimistic the consensus is in support of current and future valuations. As outlined in our June commentary, investors should expect some choppiness in the market as we work through this cycle. Within this overall market scenario, we are continuing to take advantage of any short-term weakness to build positions in our high-conviction stocks and, where applicable, take advantage of the heightened volatility by using increased option premiums to enhance cash flow. As new information presents itself and market conditions change, we'll continue to make active investment management decisions as we work towards meeting your financial goals. Once again, please stay safe and healthy, and on behalf of the Croft Financial Group, thanks for watching.